Good morning. It's Harvey Jackson. I'm just going to get through a few news items. Title is just about the cooking oil that U.S. is suggesting not buying from China, but we'll get into that in just a little bit here. The CONAB came out yesterday, and they put in some numbers. And again, so the lack of the U.S. actually having numbers for countries like Brazil in Argentina. Brazil puts out their own numbers, and they're suggesting corn production at basically the same as it was last month. Basically saying 138.6. Corn exports the same. Ending stocks are going to increase just slightly, but below last year's. Soybean production is going to be a new record, probably at 177. But yeah, so just the reason I'm bringing this up is because Brazil just keeps on pumping in and making more and more production of soybeans, especially. But they are picking up on growing a bit more corn too. So this is just a comparison from one year to the next. But you can see if this was to get put into a graphic, you would see a pretty steep increase of production year after year. Well, I guess I shouldn't say year after year, but pretty constant. But anyway, so just looking at ending stocks, same number, but maybe just in a different view. Export inspections, which still comes out. USDA, this is considered essential, so it's still getting printed. Corn was kind of in the middle of the range, at the lower end of the trade expectations. Soybeans right in the middle as well, towards the top end, and wheat right in the middle of the trade expectations. So here's the True Social post that came out yesterday. And I believe that China purposely not buying our soybeans and causing difficulty in our soybean farmers, and considering terminating business with China having to do with the cooking oil. Well, China's exports of used cooking oil hit a record highs in 2024, but they already shut that off. So I don't know what the story is, but Trump definitely trying to make headlines, and he had. Yeah, it's causing some issues, but it's just maybe a little bit of pause on the canola there as well, because canola actually is used for cooking oil in the U.S. Another story based on China, trade imbalance between consumption and investment. So you can see household consumption versus expenditure, and China is in the red. They actually are decreasing household expenditure versus increasing, where the U.S. is the only country that looks like it's increasing. And gross fixed debt capital. So one of the article that was written is that China is going to keep on spending money in capital funding to, even though their consumption in their own country isn't there to match it. Palm oil imports hit a 4-month low in India, and I highlighted this area because it's not just the China that took advantage of the Argentina waiver of the taxes for the exports. India did too. They bought 300,000 tons of soy oil from Argentina. Staying on the Argentina story, there's a by-election going on right now, or election going on right now, and if Trump's friend Mealy loses, then the money that he had promised is probably not going to go there. Quick look at the weather. Looks like there's going to be some cooler in the U.S. Now that can be expected at this time of year, I guess. But you can see the prairies look like it, towards the end of the month might be warming up just a bit. You can see the weather kind of get built in here. You see still Manitoba's still going to get some showers there, but I was back and forth to Winnipeg yesterday, and pretty frosty morning. Started off at -6, and by afternoon when I was on my way back, combines were rolling in the corn, and that's basically the only crop that's really left out there. There's still some soys and some late canola, but corn is the main crop that's left. Weather build in good moisture to get planting in Brazil, so they're way ahead of pace on planting. I think as of earlier on in this week, it was in the 20s for sure. So Oilseed, or just a quick look at the market here. Canola, basically just a $0.50 up per metric ton at 616. So basically chopping sideways. Rapeseed is down $0.50 euro. Soybean oil trading rate at the 50.55 cents per pound. Palm oil just up slightly at $125 ringgit. Crude oil basically flat at 58.65. Soybeans flat at just above the $10 mark at 10.02. Down 4 cents actually, sorry. And then your wheats are down anywhere from 1 to 3 cents. And the Canadian dollar is slightly down again. So just quick look at the canola, and I'm going to look at multiple months here. So November, basically at the top end of this range if it breaks out of that channel, but it's that's looking like a high volume area. So it could be pivoting from one area to the next here. Same thing on the canola futures here as well on January, right at the top end of that range, and looks like your 20-day moving average is maybe causing some area of resistance not to break through. And looking farther into 2026, you can see that we made lower highs, but it's still the steepness of this curve is not anywhere the same as the canola and in the earlier months. Rapeseed, not challenging the 20-day moving average, or not quite trying to break it through that the top end of that channel either. Soybean oil futures basically trading sideways, and I keep on mentioning how the 200-day moving average is definitely cause support, even though we have a down day today. Soybean futures, the momentum is this way for sure by the look of this. Palm oil still at the top end of its range, even though it's challenging some of those short-term moving average or medium-term moving averages there. The crude oil futures still got some downward momentum here as well. Same thing with the Canadian dollar. Looks like a downward momentum here as well. Quick look at the Minneapolis wheat. Still, there's no momentum is this way down, and would like to see some sort of recovery here, but have not seen that yet as of yet. Same thing with Kansas, Chicago, milling wheat chopping sideways, which is what would like to see before a recovery. And your one thing that I look at, but not often enough, your volatility index has spiked up a little bit with the increase in trade rhetoric and S&P having some bad days a few days ago. Cattle futures just keep on creeping higher here, live cattle and feeder cattle. That's all I have for you.